With the Super Bowl around the corner, most fans are focused on the score, but the real money in sports has always been in ownership. For decades, pro teams have been a store of value for billionaires. So how do you bring that playbook to your portfolio? Chris Marangi is Co-CIO of Value at Gabelli Funds, and he joins us now. Chris, thanks so much for being here.
Delighted to be here.
All right, so you've called sports an anti-AI trade. Explain what you mean and why is now the time to invest in sports?
Well, it's all about experiences versus things for a certain generation, and I think that continues. Consumers are willing to spend money to go to theme parks, go to concerts, go to ball games, so we're trying to capture that. It's an area of the economy that is probably harder to duplicate with AI than others, although AI has certainly touched just about everything in the world.
So you have an ETF, Goals, GOLS, to make it easier to actually invest in sports. But before we get to that, let's actually talk about how you define sports as far as your ETF is concerned.
Yeah, so it's Gabelli opportunities in live and sports. So sports are a component of what we call live entertainment, the biggest, of course. And so we're primarily interested in the 30 or so teams and leagues that are publicly traded across the world. But we're also involved in some of the ecosystem members. That would include some of the venue owners, the ticketing companies, the data providers, as well as the media partners for sports franchises. So, it's a pretty broad universe, all benefiting from the same underlying secular and cyclical trends.
So why exclude gambling and gaming, since they're clearly such a big part of the sports experience right now?
Yeah, it's an interesting question. That's statutorily, we can include those companies, but they are a little bit different. And obviously, immense change in the gambling companies with the advent of prediction markets. So we tried to stay away from those. And I think when PASPA was passed and allowed gambling on sports many years ago, I think overall it was probably a net positive for teams in that it increased engagement. Viewers stick around to watch that last pitch, even in a blowout. But I think still some open questions about how this impacts sports long term.
Okay, so talk to us about the biggest growth drivers in sports right now. Is it streaming rights?
Yeah, so media rights certainly have always been the biggest revenue driver or economic driver for sports. And there's been, of course, a very large change in how media rights are sold, packaged. Obviously, we've gone from at one time radio to broadcast to cable television, i.e. ESPN, and now to streamers. All the big streaming companies, it's Apple, Amazon, Netflix, Google, are all involved in sports programming, and they're going to continue to be involved, and they're probably the winners of sports right contracts going forward. So that is actually a trend that we think is a positive overall for sports teams.
Okay, so break down some of your biggest holdings in GOLS then for us.
Yeah, so we've got what I'd call our core four holdings. There are obviously more than that, but it's the Atlanta Braves Baseball Club, which used to be owned by Liberty Media, still effectively controlled by John Malone. Formula One, which of course is the promoter of that racing promotion, also involved with Liberty Media. Manchester United, of course, one of the most popular football or soccer teams globally, depending on where you're from. And then MSG Sports, which owns the Knicks and the Rangers. One of those teams is doing quite well this year. The other is a work in process.
Well, we had some of the Knicks here on the floor of the stock exchange, the alums, I should say, with us not too long ago. How should investors be thinking about U.S. versus international exposure? Do international leagues like Manchester United, you mentioned Formula One, offer better growth opportunities than some of the U.S. leagues?
Yeah, I mean, listen, the U.S. obviously is more developed, but there's a lot of growth overseas. And in general, non-U.S. teams trade at lower multiples for sometimes valid reasons. But, obviously football and basketball have made well-known inroads overseas, and I think that will continue. There's been lots of talk about actually establishing an NBA Europe competitive league, and that should continue. I think you'll also see a lot more teams come public, both in the U.S. and internationally.
Dig into that a bit more. How do you see the sports economy evolving over the, say, next 3 to 5 years?
Yeah, so there have been some recent rule changes amongst the big four leagues in the U.S. That has allowed private equity, other institutions to participate in the growth of sports, and they've taken advantage. The owners have taken advantage of that and sold minority stakes to a number of different participants. And we think that continues and should both surface value for them and actually create some opportunities to invest. You've also got some interesting sports assets hidden in other companies. So, for example, one of the entities that we own is Rogers Communication, better known as the integrated telecommunications provider in Canada. But they also own the Toronto Blue Jays, the Maple Leafs, and the Raptors. And they have publicly discussed actually taking that franchise public. So that'll be an even bigger opportunity for us. You've got Diageo, the global distilled spirits company, which owns a very popular cricket team. And some others like that. We're trying to find those and suss those out as opportunities for us to invest.
How would this ETF fit into a broader portfolio, aside from being an anti-AI play? Is it a growth play, a defensive hedge? Is it just thematic allocation? How do you see it?
Well, yeah, you think about the spectrum of assets that somebody can play in. You've got sort of gold on one side, not golds, but gold, the metal, which generates no cash flow, but has been a store of value for thousands of years. And then you've got what I would call just industrial metal benders at the other. You don't know what they make, but they generate consistent cash flow. May not be a high multiple. And sports, it's probably closer to the gold side. They have been very stores of value. They're scarce. Obviously, there are occasional expansions. And there's also certainly an ego or vanity component that underpins the value of sports franchises. That's hard to replicate. But that certainly will continue as long as humans are in charge. And so, we view them as again, as stores of value, as something different, a diversifier. I think there's a strong argument to be made that sports franchises are actually a separate asset class.
Yeah, in a way to own a piece of a professional sports team if you don't have billions of dollars. But what would you say to skeptics who see sports as maybe too niche or too volatile for investing?
Yeah, I wouldn't say it's too volatile. It is certainly niche, and it's a category that needs to grow to make it more investable. But listen, if you look at how sports franchises have compounded over the last dozen or so years, where we have some of the data, they've compounded at, call it a mid-teens rate. That's better than the S&P, which is a pretty high benchmark, with a lot less volatility. So, can never guarantee what happens in the future. But we see reasons for that to continue. And guess what? It's fun to own a sports franchise.
Just finally, what trends are you seeing that investors might not realize yet?
Well, obviously one of the big questions we get is, well, broadcast television, cable media is going away. What happens to these franchises? And I think we do see the future. As I mentioned earlier in the program, the big tech companies are already involved, and there's an opportunity for them to increase the overall pool of revenue available to sports franchises. These are the an anchor product for all of those future bundles. And so we see that. We see continuing preference for in-person events. That's actual tickets sold. And who knows, maybe AI does happen, but there'll be ways to monetize these franchises, which are so beloved by so many.
Okay. Just finally, you mentioned the Atlanta Braves, is some more international exposure, so no clear football exposure here. Are you seeing any increase in flows because the Super Bowl is approaching and people, you want to place their bets?
Well, we'll see next week. Certainly, we launched this January 2nd and have seen a lot of interest from both retail and, surprisingly to me, institutions and family offices who are all looking for ways to diversify their portfolios. It's hard to own a basket of these 30 or so clubs. A lot of them are ordinary stocks in foreign markets that you can't own in your brokerage. And so that's what this vehicle provides. It's an easy way to get a diversified basket of exposure.
Okay, we'll leave it there. Chris Marangi, Co-CIO of Value at Gabelli Funds. Thanks so much.
Thanks for having me.